Good evening, everyone. Welcome to Closing Comments here on September 17th. Let's jump right into our charts and see what happened in the markets today. First up, December live cattle on the board. Did see a little bit of downside hitting this cattle market today, as we did see a nice little flush below that prior day's low. If we take a look on our intraday charts here, we can see that opening range breakdown below that 234 mark, which was this prior day's low, really opened the door to some selling pressure. Nice little flush all the way down here towards the 231 mark. Bulls stepping in and getting aggressive once again down here near these low 230s. Exactly what we wanted to see. Coming into this week, we knew it might take a little bit of time for this market to accumulate enough buyers to turn it around and push it back up towards these all-time highs. Looks like that's exactly what we're seeing here. Little fake breakout here on Monday on low volume. Just wasn't enough to get this thing moving out of here. And we've seen this thing reverse all the way back down here towards this prior week's value area over the last 2 days. Showing good support here. Nice B-shaped profiles over last week's action and over the first 3 days of this week's action. So expect to see this market continue to get passed back and forth here across this range. We've got a rough $5 to $6 range here between this 231, 230 to 235 to 236 mark. Look for this market to continue bouncing back and forth here as it continues to tighten up and pick up some more buyers. We can see here over the last 6 days, we've had about a $5 to $6 range here, and each time we get into the bottom third, we see some pretty aggressive buying activity stepping in, and some nice breaks out of these this range lows here. So looking like the bulls are alive and well, continuing to acquire some of these live cattle here down here near these lows. Good sign here all for the bulls. We want to make sure that they continue to defend that 230 mark. If we do get offers below 230 in this 50-day moving average, it could open the door to another little flush down here into the low 220s. So we want to make sure that the buyers continue to defend that line. But in the meantime, looks like this thing's just going to continue chopping up while we're picking up more buyers. Bulls want to continue to push this thing back up here towards this 235 to 236 and a half mark, which was Monday's high. If we can see pressure get built up on this level, price start to coil up and draw a hard line to trade around, we could see this market start to break out. But we want to make sure that the bulls are able to finish the next couple days of this week up here near these highs and even get a close up there above that 236 and a half mark to really carry that momentum into next week and potentially get this market rolling back towards those all-time highs. So look for this market to continue swinging back and forth in this wide range here. We want to see them continue to build up pressure and push this market back up towards these highs and defend this 230 line. So that's what we want to see. Be cautious below 230. But in the meantime, it's looking like a pretty good dip buying opportunity here as this big picture uptrend still remains intact, and we should continue to see some higher prices as we head into the fall. Same story over here in these October feeders. Range is just a little bit wider and looser here. We have been trading over the last 6 days at about a $10 range in this feeder market compared to a $5 to $6 range in those fats. We can see this morning we had a similar opening range breakdown, flushing all the way down here, showing good support at the 347 mark. We can draw our lines here once again, setting this range up into thirds here. We want to make sure that the bulls continue to defend the bottom third of this range, showing that they're getting aggressive down here at these cheaper prices down here below 350. Looking like the bulls are continuing to stay aggressive, pushing this thing up off of that 347 low today. A little bit of pressure accumulating here. Prices starting to coil up here, finishing the day right around the 350 mark. Bulls should try and carry some of this late day momentum into tomorrow's session and push it back up there towards that 355 to 356 mark. Bulls want to definitely see this market finish up here for this week or even above this current week's high up right around the 356 mark, that is. And that should get this momentum rolling, as we do expect to see this dip be bought up and these cattle prices continue rolling higher into the fall. Just taking a little bit of time here to accumulate enough buyers to turn this thing around. We do have a little bit of room here between this bear pivot and this 50-day moving average. So if we do get a little flush here, we do want to make sure that this market continues to hold this 50-day moving average in the event of a little bit more sell-off. But at the moment, it looks like the bulls are going to continue to get aggressive down here and buy this thing up off of this 355 to 350 area. At the moment, we're just hanging out here in this range, so no need to be too aggressive here. We want to make sure that we're buying these lows down here and make sure that this 345 mark is defended. But we do expect to see this dip continue to be bought up. Look for this market to continue to accumulate some buyers. And as long as we can carry some of this momentum up here into the end of the week, we could see a nice little breakout as early as the end of the week or potentially into next. So look for this market to continue to balance out here and try and tighten up, coil up, and draw a hard line here as well for us to trade around. but we want to make sure this market gets back above that bull pivot, and we should see some new all-time highs here as we're rolling through the fall. Over to these corn futures now, this December corn market, continuing to see some resistance up here at this gap right around the 430 mark. We can see this gap that we created over the 4th of July weekend this year continues to hold prices down. We did try and chew through it yesterday and today, but just a lot of resistance up here at this 430 mark. And if we really zoom out, we can see that 430, it's kind of a blurry line here, but we can see that prior support over the past year is now acting as resistance. This market's having a hard time chewing through it at the moment. This market has climbed from off of these contract lows all the way through this 50-day moving average. It continues to chew through a lot of this resistance here. And so this market could have a little bit more upside here, but at the moment, just having a tough time breaking through this 430 level. Might need to see a little bit of a dip back down here towards this 416 to 420 mark, find some support at these rising moving averages before it makes another run at this gap. But once we're able to push through here, we should have some smooth sailing for the bulls and potentially a new uptrend to come from there. But in the meantime, look for this market to continue balancing out here and trying to pick up some more buyers to get enough pressure to break this thing out and head back towards this mid 450 range. So, but in the meantime, we just want to make sure that the bulls are able to break 430 otherwise and close this gap. Otherwise, we could see this thing just continue to chop up here and try and fight this battle around the 430 mark. So just be cautious and slow play this thing. We want to make sure that we can see those buyers really get a nice breakout or find some better risk reward areas to trade around down here near these moving averages. Crude oil prices hitting some resistance here today. We are starting to roll over into that November contract. So just another ingredient for a choppy recipe here. We did see this market break out yesterday above that 50-day moving average and our bull pivot. But just like we saw back here, nice little rejection back down there below the 50. And so far here in the evening session, we are continuing to see some selling pressure down here below today's low. So not a whole lot of upside potential, not a whole lot of downside potential. Look for this market to continue chopping up here in the low to mid 60s, as this has been a very comfortable spot for this oil market. Bears needing to get a breakdown here below 61.5 to see any more downside come from here. But in the meantime, look for a nice low volatility, choppy environment here in this oil market to stick around. Equity markets having a nice little day here off of the Fed decision. We did get a quarter basis point cut today by the Fed. Little volatile action here. But finishing the day pretty much unchanged. We did have nice swings back and forth, flush all the way down here towards the low of the day at 66.11 on this December S&P contract. But pushing down here, breaking down, and rallying right back up there to the opening price for the day, finishing unchanged. At the moment, if the Bears aren't able to push this thing back below 66.60, more upside is to come. So forget all about any fear or potential concerns regarding the Fed. As long as we're trading above 66.60, it's clear skies and smooth sailing for the bulls, and we should continue to see these equity prices climb higher. Same story across each of these indexes, having a nice flush lower today, but snapping right back up. And looking like a pretty bullish scenario here as we are getting a soft Fed moving into quarter four here. Look for the higher prices to continue and this uptrend to keep on rolling. That's all we got for this evening. We'll catch you guys tomorrow night.